A chilly reception for Snowflake earnings, despite the company beating expectations and issuing solid guidance. So does this show the growth trade is out of gas? That's the question of the morning. And John Ford joins us now with more. John.
Well, Andrew, yes, it had to happen eventually. Sure, we're in this era of low interest rates, and that's tempting everybody to take crazy risks to make money. And we've been in this mode for so long, it almost feels normal. But now the wind is shifting. Snowflake tanked 9% yesterday ahead of earnings, beat on the top and bottom lines, but still didn't recover. It's now trading right around where it closed on its IPO day. Zoom had blockbuster earnings earlier this week, spiked Tuesday, then belly flopped. DoorDash, you guessed it, strong growth. Stocks lost almost a third of its value since last month's highs. Notice, I'm not talking about problems with companies. I'm talking about problems with some stock prices. I'm not saying these companies' growth is out of gas. I'm saying the growth trade is out of gas. So if you're an investor, not just a trader, you shrug this off.
But just so I understand, you feel that it's over? The party's over?
Well, on the other hand, the NASDAQ peaked, what, 3 weeks ago? I mean, right around the time the 10-year Treasury yield started running hot. It's a bit early to call closing time. I mean, the growth trade just might have more in the tank because, look, remember back in October? Looked like the run was over then. March a year ago? Forget about it. I mean, the growth trade wasn't out of gas then. Those were buying opportunities. This is probably more of the same. I mean, did you feel like a chump that you didn't buy Snowflake on IPO day? Well, Merry Christmas. Same with DoorDash. Is this a nutty market? Yes. Are interest rates the tail that's wagging the dog here? Probably. But we can see that the road to a global pandemic recovery is going to be tough. The Fed still sounds committed to keeping rates low for a long time. Meanwhile, companies like Snowflake in the cloud, Zoom during work, and DoorDash at dinner are keeping the economy going while we see what kind of stimulus we get and what it does. So, yeah, growth trade, probably not over.
Okay, hold on. Final question then. What are the CEOs of these companies saying about the results and expectations? Is there enough optimism to fuel another rally in your view?
Well, Andrew, it does seem to me that the optimism is there. I mean, listen to Snowflake last night, and you just take the stock out of it. For Q1, the product revenue that they're projecting is up between, 92 and 96%, 81 to 84 for the full year. DoorDash also building infrastructure. And yeah, I mean, if you're down on DoorDash because they're building out infrastructure, then you forgot what Amazon did a generation ago and where it got them. So, you know, these CEOs, not only do they still have strong growth, but they're executing the plan.
Shepard Smith here. Thanks for watching CNBC on YouTube.